Hi guys, welcome back to the channel. My name is Rebecca and on this channel I go for all things accounting, finance, Excel and investment related. So if you like this kind of stuff, then please do consider subscribing, and otherwise let's get straight into the video. So in today's video we're going to take a look at partnerships. So if you're currently trying to understand partnerships, the theory behind them, the journal entries, how to prepare a set of financial statements or anything along those lines, then you're definitely going to find this video useful. So let's jump straight into it as we always do. So what we're going to focus on today is drawings for goods or own use, interest charged on drawings, profit share, salary, and we're also going to have a look at balances brought forward as well as balances carried forward into the next financial year. So let's have a look at the written wording that we're being provided here. So Rosie and Lisa are in a partnership together and they share profits 60-40 in Rosie's favour. So what that means over here is that Rosie gets 60% of the total profit in the financial year and Lisa gets 40% of the profit in the financial year. Now, in a real life situation, the reason for that might be because Rosie is a more established partner, so maybe she's been there longer than Lisa has, or it might be that Lisa is taking out profits from the business in the form of a salary over taking that out as profits from the business. So we'll have to see what happens in this question to see what's going on. So I'm just going to ignore the rest of the information that we've got down here, and instead I'm going to zoom in and see if we can find what the balances brought forward from the last financial year were. So down here at the bottom we're being told that we've got balances brought forward of £45,000 and £25,000. So we're going to pop the balance brought down over here on the right hand side of £45,000 for Rosie, and we've got balance brought down for Lisa of £25,000 there. Just going to make sure that our totals actually pick that up. Okay, so next we're being told that the profit for the year end 30th of September was £67,000. So profit again actually goes on the right hand side of the partner's current account. So we're going to pop profit share over here and we've got 67,000, but we need to times that by 0.6 because that's going to give us 60% of 67,000. So if you're ever putting through a formula in Excel, this is a very quick way to get to say 60% by just doing times by 0.6. So in Lisa's over here, we want profit share again, and we've got 67,000 times by 0.4. So that's going to give you 40%. And if you're not sure that that's going to work, then you can just add up the total of those two together and that should give you 67,000, which it does. So that's worth doing in an exam if you want to save yourself a bit of time instead of just calculating that on a calculator. So what we're next being told is that Rosie does not receive a salary. Okay, so Lisa receives a salary of £3,000 per quarter. Now pay particular attention to this here because Lisa is not receiving a salary every single month of £3,000. What she's receiving is £3,000 every 3 months. So in order to get a full 12 months for the financial year, we need to calculate the £3,000 times by 4. So we're going to pop that again on the right hand side of the partner's current account. It's going to be a credit, and we're going to do £3,000 times by 4. So as in, 3 months times by 4 gets you to 12. So next we're being told that during the year Rosie withdrew £13,000 from the business and Lisa withdrew £5,000. So these are classed as drawings, so we want to put these on the left hand side as a debit to partner's current account. So we've got drawings over here, and this is £13,000 for Rosie, and drawings over here, which is £5,000 for Lisa. So when you're popping these in, just make sure that you're double checking the figures down here as well. Next, interest on partners' drawings accounts. Okay, so we're being told that Rosie had interest on her drawings of £500 and only £100 for Lisa. So sometimes they will ask you to calculate this, but it's not very often that they do. They tend to give you that figure in an exam. So let's just pop that in here. So again, that's going to be on the left hand side. So it's £500 for Rosie, and interest on drawings in leases is only £100. So once you've completed this element, so you think you've gone down all of the written piece of information that you provided, just go back through it again and make sure there's nothing that you have missed out. So there's definitely nothing there that we've missed out on. So what we now need to do is actually balance these T accounts. So we can see here that the amount on the right is much more than the amount on the left. So that's telling me that Rosie has received more from the business than what she has taken out. And it's the same again with Lisa. So cumulatively, Lisa has more profit and salary and balances brought forward than what she's withdrawn from the business. So neither Rosie nor Lisa is overdrawn with the partner current account. So got balance carried down over here is going to be on the left, because you can see here that we've got 85,200 over here and only 13,000 over here. So let's do that. Plus that minus that minus that. There we go. So we get a balance carried down for Rosie of 71,700. And let's do the same again for Lisa. So if we add all of these up and just take these away, that gives us 58,700 balance carried down for Lisa. And these now balance, and we can check by just doing a little total down here that you can see. And that's that question dealt with. So let's move on to another example. Here we're being told that Axel and Vinny are in a partnership together and that they share profits 30-70 in Axel's favour. So I'm just going to pop 70% up here. And I would also say, if you're preparing a T account, again, whether that be on paper or actually in a real life situation at work, then I would definitely write down the percentages next to the individuals, because that does help when calculating items later on. So again, I'm going to jump straight down to where we've got balances brought forward. So we've got Axel's got a balance brought down of £20,000, and Vinny has a balance brought down in the last financial year of £15,000, which is just this information down here. Okay, so the next thing that we're told is that profit for the year end the 30th of April was 99,000. So I want to again calculate profit share, which is going to be 99,000 times by 0.7 this time, because that's 70% of the 99,000. And equally in Vinny's, we've got the 99,000 times by 0.3, so that gives us 29,700. So if we add those two together, again we get £99,000. Next, Axel receives a salary. So he's receiving a salary of £6,000 per year. So per annum just means per year. So we've got salary, which again is a credit to the current account. So that's £6,000 for Axel, and Vinny is receiving £1,000 per month. So we just need to times that by 12 to get to £12,000 per annum or per year. Next, Axel drew out £25,000 in the year, so got £25,000 there. And Vinny drew out £3,000. So drawings again are a debit to the partner's current account. And finally, we have interest on partner's drawings. So we've got interest on drawings, can't spell, of £700 for Axel, and interest on drawings for Vinny of £300. So I'm just going to take another look through to make sure that there's nothing else that we've forgotten. So we've allocated profit, we've popped through the salaries, and again kept £6,000 and £12,000, £25,000 of drawings and £3,000 of drawings for Vinny, and then interest on partner's drawings accounts as £700 for Axel and £300 for Vinny. And we've also got our balances brought down of 20 for Axel and 15 for for Vinny. And I'll just say it's so easy sometimes to misread these questions and accidentally say put the wrong figure into the wrong partner's current account. So that's why it's also worth double checking your figures. So let's balance these T accounts off. So we've got a balance carried down over here, which is going to be 69,600 for Axel, and a balance carried down for Vinny, which is going to be 53,400 pounds. And you can see down here that they do balance out. So once again, if you're reading this and trying to understand what's going on, we can see that cumulatively the profit share, salary and prior current account balances for Axel, so he's received more from the business than what he's taken out. And it's the same again with Vinny. As you can see here, there's a large amount on the credit side of Vinny's current account versus what's actually gone through for his drawings and interest on drawings. So I hope you found this video useful. As always, consider subscribing, and I shall see you on the next video.